The pandemic has dealt a blow to companies across the board reporting their Q2 earnings this week. Airbus swung to a larger than expected loss of $1.4 billion. Its revenue slid 55% from a year ago. The European plane maker has announced fresh cuts in production of its A350 jet to just 5 of those a month. To cope, it's also shedding about 15,000 jobs, or 11% of its workforce. Airbus expects the COVID-19 pandemic to hold output down by 40% compared to pre-crisis levels till the year 2022. European oil and gas majors have managed to shield their second quarter results from the collapse in demand for fuel. France's Total, as well as Shell, scraped small profits thanks to strong oil trading. But trading earnings, they haven't protected the companies from the gloomier long-term picture. The pandemic has prompted energy firms to slash crude price outlooks, and that is slashing the value of their assets. France's Total wrote down $8 billion in the quarter, while Shell cut the value of its assets by $16.8 billion. It's a wake-up call for automakers as well. French car maker Renault posted a record $8.6 billion loss in the first half of the year, partly fueled by troubles at its alliance partner Nissan. Volkswagen, meantime, has reported over $900 million in operating losses, forcing the firm to slash dividends. Mark Matthews joins us live now. He's Managing Director and Head of Research Asia at Julius Baer Bank. Hello, Mark. Good to speak to you this evening. Given that, overall stock markets rebounded in Q2 from the drubbing that they took in March, investors seem to have discounted that quarter in a way, already expecting things to be bad. Now we've got these earnings results in. Were they too optimistic?
The ones that you just talked about, auto companies, energy, I don't mean to insult them, but I don't really know if those are the businesses of the future. The businesses of the future are the big companies that are going to be reporting after the S&P closes tonight, like Apple, Amazon, and Alphabet and Facebook. So I think those are the ones that we really need to pay attention to. But I would say that this is the time to really kitchen sink it, because you can blame everything on the coronavirus. So if I was one of the companies you just cited, I would naturally say things are really bad because you can blame it on the pandemic, and then if things look better in the future, you can write back those provisions, or you can adjust your long-term forecast for aircraft demand and that kind of thing. But the S&P, I can't remember what percent of S&P companies have reported so far, but 80% of the ones that have reported so far have beat expectations.
Okay, well, how then should investors sort of position their portfolios then, if you like? For instance, which sectors do you think they should be focusing on?
Every country's different. I mean, if I was to talk about India, for example, I'd want to be talking about insurance. If I was talking about China, I want to talk about the new economy stocks, like the big technology stocks. If I was talking about Taiwan, I'd be talking about semiconductors. So it depends. Typically the leaders in any sector will outperform, and you want to choose sectors where there's strong structural growth ahead. Broadly speaking, though, I would say that our preference is for technology on the growth side, and then real estate investment trusts to produce income.
Mark, Q2 numbers for US GDP, they're expected to contract on this annualized basis of some 34.5%. And if they do, if those estimates, sort of bear out, that would mark by far the worst plunge, that we've ever seen recorded. Again, the outlook for the rest of the year, does it need to be adjusted now that we're seeing this second wave of infections across parts of the world and a resumption of lockdowns?
No, as a matter of fact, if it needs to be adjusted, it might have to be adjusted up. And I know the overall cases are still rising in the world, but the two economies that are the biggest economies in the world, the United States and China, well, China has this thing under control, and I think it will continue to. The United States, it's been a terrible problem, but if you look very closely at the numbers, they look like they're peaking and rolling over all the country, the nationwide data, but even those Sunbelt states Texas, Florida, Arizona, California. The numbers of new cases are rolling over. Hospitalizations are starting to go down. Percent testing positive drifting back from 9 to about 7% now, I think. And on top of that, there's a lot of progress being made on therapeutic drugs. They've identified, I think, over 20 drugs which are effective at combating the coronavirus if you get it. And I'm pretty confident, based on what we've heard from the 4 companies that are in phase 3 of clinical trials, that we will get at least one with the data to prove they have a safe and effective vaccine by September, and that will get FDA approval by October. So actually, I think there's probably upside to second half numbers.
Okay, well, thank you very much for your thoughts this evening. Mark Matthews from Julius Baer.